Welcome everyone to our fresh new show today. How is everyone doing? I'm happy to be here.
Welcome,
What
welcome,
about
welcome,
you, Jonathan?
welcome.
How are you doing
Oh, I'm
today?
good. I am fantastic, 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 fantastic. Well, I'm in trade, and it's not in profit, so been better. But it is what it is. That's trading, right?
Uh, as long as you're following your plan, right?
Yeah, exactly. That's it. That's it.
Yes.
So yeah, today we were going to talk about something today. I remember
I
yesterday we
yes. Yeah. We were gonna talk about journaling and about the importance of, analyzing and extracting value out of your statistics,
that's
among other
right.
things.
That's right.
I forgot to mention yesterday. Did you have that plan already yesterday in the background? Because I like it. I
You
think
like
you
it,
did,
yeah.
right?
I was waiting
Yeah.
for someone to
Yes,
comment on that. Yes, I went to
I like it.
IKEA, so I bought a nice little plant. I'm setting up a shelf. I'm decorating the office a little bit. It's
Nice.
because obviously I want a nice background like you have. You have a beautiful background right there.
Thank you. Thank you. Yeah, that green did your image well. I mean, the background, the composition, it's a
Yeah,
nice addition. I like it.
it
Really like
is.
it.
It is. Thank you. Thank you. Yep, I'm. IKEA is awesome. Okay,
Yeah,
so I
for
are
sure.
you in any trades right now?
No, I'm not, but I can show why not. And what I'm waiting for to get in a trade. Let me get
Yeah.
the sound
Well,
out
let me.
of
Yeah.
the.
Okay.
Go ahead. If you want to show something first.
Yeah, I just wanted to show a trade that I'm currently in right now, and
Okay.
this is interesting because, and by the way, guys, let me know. I've got the speakers. As you can see, I don't have the headphones on, so I got the speakers. So if you are experiencing any echo, if you can hear, Victor through my mic, there's echo. Just let me know, and I will adjust the volume on the speakers because I'm trying to I'm getting having the headphones on all day is just giving me a headache. Honestly, so I'm trying to reduce that. Now, yesterday we talked about. Um, Okay, so yesterday, yeah, look at that. I got the fivers looking good. This
Nice,
is good,
nice.
good stuff right here. We're gonna get Victor one as well. And now when I'm out on town, I walk around. I'm down in the city center. I walk around and people are like, "Oh my God, are you from the fivers?" Like asking for autographs and everything. And like, can I get an account? I'm like, nah, man, you gotta do it the old fashioned way. You gotta do it with application. So yeah, I got a lot of people just running after me down the streets. It's amazing. It's amazing.
I can
Very,
imagine. I can imagine.
yeah, it's incredible.
Those are
Yeah,
the
so
price to pay. That's the
yeah, the
sacrifice we
giveaway
need to
from
make.
yesterday, the winners from yesterday's giveaway is going to be sent out later today. Later today, they will be sent out. So you'll get an email for that as well. So you're not forgotten. Account plus hoodie giveaway. Well, a hoodie where that's definitely an option. That's definitely an option. Anyway, so I want to cover this, right?
Congratulations
So here's
to this viewer.
nice.
I
Congrats,
think I
man. That's
just
amazing.
passed.
Passing phase one.
Yeah, that's what we want to hear. You guys passing, progressing, and making reaching those milestones. Very good. Very
Yes, that's
nice.
amazing, guys. Congrats. Really, really happy to see that. So, and by the way, guys, while you're on it, let's make sure to hit that like button if you like these live streams and you want more educational volume educational did I say why did I say volume content educational content maybe because
Value, I
I
think you
just
meant to say.
value yes
Value.
thank
Yeah, I
you
think that's
Victor
what you meant to
value
say. But
yes
perhaps you were thinking about the volume and you were,
I was,
were you? Maybe you
yeah
were
I was adjusting
checking
the
the
volume
speakers.
when I was gonna say value but I was adjusting the volume so I said
Yeah,
volume.
yeah, yeah.
So yeah, yesterday we talked about how knowing the statistics, the testing that I've done, I tested the two different strategies and having the knowledge that, taking a trade where I'm exiting at half an hour has a 72% win rate, you know, how how is that affecting my trading, just knowing that? And I think today we got a really good example of that. I feel like there's a sneeze coming, so bear with me. But I
Incoming.
how how's that affecting my trading? I think today is a good example of that. This trade I took right here is is a very, you could call it late entry or early entry. I'd like to say that it's an early entry because obviously my entry, like that should have been an entry. I entered on, somewhere around this area, but obviously looking at this, I should have waited for price to come up here, and then that's where I should have entered. And I really, the trade that I should have taken or entered is actually, so now you can see that's a 0.5 R, and it's just a weird trade, But the trade that I should have taken should have been this. And now we're talking about like a 1 R or even half an R would just be a very small move down here. But I think in this case, I could do the low here, so 0.71. So this should actually have been the trade. So it's interesting that I entered this way too early. And that's because I thought, all right, so I have a 72% win rate. So let's just take the trade. It's a 0.5 R. It's a 72% win rate. But when you're taking a trade like this, then that's not a 72% win rate because this is not, this is not the trade that I should have taken.
Yeah, well, I think you're hitting the nail on the head. The numbers, in order for you to expect the same numbers, the same statistic going forward, you have to do the same trades and take the same trades you were doing during the testing. That's the question I have for you. Which entry would have been the entry you would have taken in the testing in the past, in the sample size you had? Because that's the only thing. You can only rely on those numbers, that 72% win rate, if you do the same thing you did before. Once you start changing entry criteria or entry logic or anything else, the timing, where the entry exactly is, a few pips above or below, then the numbers might start changing as well. So it's you. The point you're making is very important, which is consistency. What you tested consistently going forward, you need to be doing the same if you want to expect the same numbers.
Exactly, and that's exactly what Andrew is saying here. That's not the trade that made you, made you 72% win rate, and that's absolutely correct. I'm not supposed to be taking every trade. I'm supposed to be taking the trades that I've been testing. So, and this is why trading is so difficult. Now, just to be clear, to be clear, this is still like still has the possibility of being the trade that I would have taken ish, somewhat, because that's the entry, and then I'm expecting it to run lower. So I'm still going to be in the trade, and the stop is just the entry that's different. So I still think that there's a possibility of this being a winner, but the difference is this half an hour winner should have been a 1 hour winner in testing, which is also makes a huge difference, And this is why trading is so difficult. We test something, and then we automatically think that sort of testing will just continue, continue throughout the whole, in the future. But we have to be in the same mindset, and I think that's a major difference.
Yeah, the if you're going to modify anything, add or subtract any either rule or anything of your trade plan, of your workflow, you should be aware that the trade in itself will have a different result. So you have to know, okay, I should be taking, if let's say because what you're explaining is that your entry is different, but the trade is still valid. The signal is still valid to you. And it should go the same way with 72% chance to hitting the same levels, right? Because that's what your testing says. But the thing is, if you enter, let's say, at a worse price, half an hour will be at a different place than it would have been, right? Because the
Yeah.
R is what that's the distance to the stop loss. So if your entry is a different and your stop loss is still at the same place, that means that your half an hour price needs to travel more to reach it, right? And those are the things that will start you will start to have to consider when you add or subtract rules to your system. I understand completely what you say, that the trade it's still the same trade, and it is, as long as it hasn't hit your stop loss yet, then you would have been in this trade. So it still has that 72% chance of hitting. But you have to be aware that since your target is based on the R, and your R has in terms of number of pips has changed if you have a different entry. So it's all those considerations are things you need to be managing if you're when you're optimizing, because that's what you're doing, right? You're looking for the statistics to optimize your results, to get the best results possible.
Exactly. What were you looking at? Maybe you can share your screen and talk about. You said you were looking for something to perhaps enter a trade. And guys, make sure that you like the video. That's very much appreciated. And remember to subscribe to the channel if you're not subscribed already. I know that about 30% of you watching are not subscribed, so make sure that you do subscribe, because when we do hit 40K subscribers, which will probably happen within this month, we are doing a massive event, a trading event, where we are going to, of course, there's going to be prizes, giveaways, and stuff like that. But of course, a lot of educational value for you guys. So make sure that you subscribe to the channel so that we can get that going as soon as possible.
All right. So if I start with GU, keeping EU for the second choice. Oh, not the second choice, but the second one I'm going to be showing. The structure on GU has been broken by the NFP movement, as we were talking about yesterday, and there is a quasi that was formed by that break of that neckline, which is this is the left shoulder, right, and this is the head, right. It doesn't look very symmetrical, but that's exactly why they're called quasi for Quasimodo, right? That's the break of the neck. This is the neckline, and now we're either going to continue, right? It sounds very uber logical, but that's what it is. We either are going to continue this move, because this move may not have finished yet, or we could go and retest the order blocks that have been left behind. So I'm waiting for price to come back here. It doesn't look like it's going to do that anytime soon. That may take a lot more time. And so the second option is, where does price action tell me that it is ready to start retracing this bigger move that it did after with the NFP? And on the H4, I don't see that, at least not yet, because if you look at the of course, the fact that the price is bouncing, that's because we have bullish structure here. So that makes sense to me. Okay, I understand then why price is doing these two candles, which so far are both bullish. But if we go to the lower time frames on the H4, this is the first, actually it's the second, this is the first bullish structure that didn't really hold that well, but it's still valid. But other than that, there isn't anything yet. So I don't see that move yet completely. What I do see is there is a 1 hour quasi, right? So, and that is very interesting. This would be the left shoulder. That would be the head, breaking of the neckline. And we don't know yet how far this will go. But when it comes back, these are the areas of interest, that one and that structure, these two structures, for that move up, right? So I'm waiting for price to do to come back lower. But on the H4, I'm still missing those order blocks, those bullish formation or structures that tell me that this is a good and a valid entry. So I'm still waiting on GU. I'm not seeing what I need to be seeing, although this is the area based on the daily where perhaps price will bounce, right? Will start to form those reversal patterns. It hasn't happened yet. Well, it has on the H1, but not on the H4. And let's look at EU. And this is what I was waiting and why I'm still waiting. The reason is, right, remember we talked yesterday, we said, okay, so where is price going to stop? What do we have right after NFP, right? The close here on Friday. Where is price likely to be bouncing off, a pop or switch reverse if it is going to do that? We had two order blocks below us, and the first one is still valid, although it's obvious that that's not very relevant. So we can put that aside. The next one is this one. So we are at the second structure, and based on that, we could expect some kind of reversal here, which, the lower time frames will tell us. And if we go to the H4, I don't see that. I don't see any bullish structure being formed. Instead of that, we have bearish structure, price coming back. And even though it squeezed it, let me see, is it still valid? Actually, this isn't valid anymore. So it did break a bearish structure, but it formed another one, making a lower low afterwards. So market structure is still bearish. I don't see the reversal coming, at least not on the H4. So if anything, it could come back to this and then keep going lower or form some other structures below that. That's something. So for a long from this area, the arguments are not really very convincing, to say the least. The other thing we have is we have the ATR for today on EU, which comes right now at around, let's see, it's around 720, so right below here. And that may be the indication of what we might see today. We might see perhaps a continuation of this move, a little lower into that area around 720. And who knows, we'll have to see if it comes back from that area or not. But so far, it's not telling us, price action is not telling us it wants to reverse. And if it's not, then there's nothing to do in that case, right? If we go to lower time frames, there is actually there was, I must say, this is the neckline, right? That's the reversal pattern on the one hour. But the order block, right? The entry order block is this. It has been invalidated, right? So it is not. It's not showing us that it wants to reverse. So, we have to read that and put that into action, meaning not trying to catch along here, because at least right now, it's not showing us it wants to do that. And that's why I'm not in a trade currently, at least not in my main strategy. But I could be scalping here and there. But not. Those are the two assets that I trade, and both of them are not telling me yet. They're going to reverse, which is what I would like to see. If we're going to, if this D1 structure is going to hold, the only relevant structure is the H4, and we'll have to see if price comes back to it. And if it does, then I would be looking for that. But it's unlikely to happen today, to be honest. Because this is, if you measure this, this is the 49. That is basically the chunk of the daily movement. So it's unlikely today that it's going to go all the way up here again. Everything is possible, but it's not very likely. So we'll have to wait and see how it progresses in the coming hours. Yeah, those are the two analysis for EU and GU. Let's see. Let's see in the chat. We have. Let's see if we have any.
That's some good analysis there. I like that. I think, for me, so that's Dirk right there, the good, the bad, and ugly. So guys, give him a like and give him a follow right there. That's Dirk. He's on this channel from time to time. And we also have a comment here. So first, Dirk is commenting, Victor explains things so well. And then Sam the trader says, yes, he does. I wonder if he has moments of tilt in tilt trading. So do you have
Of course,
moments when you
of
make
course.
mistakes?
Of course, we all do mistakes. And that is one of my weaknesses, actually, going on tilt, because I don't know, I consider myself very competitive. And that competitiveness is something that is good as a drive to, to become better, to be the winner, to, win it all, push it all. But it can also be, if you have too much of it and you don't manage it well, it can exactly that, put you on tilt. And at the beginning of my trading, I used to have that a lot, a lot. And I would go into extremes and, completely lose control at the beginning. And with time progresses, I have less of it. But I need to be aware of that. That's part of my personality, right? I'm very competitive and I want to win. So I need to be calm and remember to stick to the plan. I have rules to keep me from going over tilt, on tilt, over trading, and I need to, check, gauge myself every day to make sure that I don't, even if I don't go on tilt, there are, gradation from going completely on tilt, right? You could be, putting maybe not a lot of trades extra, but maybe just one or two, which you shouldn't have, right? So I can sense that and see those indications from, from a mile, I would say, thanks to journaling. But yeah, that's something that I still have to take care of, and I think that's something because at the end we're humans, right? You can eliminate that part from trading completely, as long as you are still the one making the decisions and pushing the buttons. So that's something you'll have to deal with it the rest of your life. But eventually, if you do it right, and you journal about not only about your trades, but also about how did you manage your greed, your losses, about your mindset, how do you handle all of that? That will give you tools and modalities how to become better. And if you're focused on that, eventually you will get better at it as well. If you, for example, when you had a bad day and you notice that you overtraded, that is the moment you need to be writing that down, reflecting about it, and see what can you do to avoid it. If you do that process well, and it may not completely be able to avoid it next time, but you will be more aware. And the more aware you become, the easier it becomes to identify it and perhaps do something about it. And so it's a process that comes with time. But I don't go on tilt anymore, and not like before. But it's something that I still need to keep in check from time to time.
Yeah, no, I absolutely agree with you. It's the the dangers of going on tilt is not something that disappears just because you become better at trading. And I mean, of course, you most likely become better at trading because you're also better at managing your emotions and making sure that you don't go on tilt as often. And when you do go on tilt, you're supposed to, the risk management side of things is supposed to come in and take over and make sure that you're not losing too much. But is there any signs that when you feel this, or is there any signs that you feel you're about to go on tilt?
Yes, there is. I one of the things the thing is, I have a trade plan, and when I'm going on tilt, typically what happens when I start going, nowadays I stop myself, but when I start seeing that, what happens is I throw out all the rules, right? And that's exactly what going on tilt is. It's like the bull on cartoons, seeing that red towel, right? focuses completely only on that tunnel vision, and it only goes through at and charges at that red towel. And that's that kind of. So when I see that I'm no longer, doing all the steps, logical steps that I need to be doing in my analysis. For example, what I just did, I mentioned that the GU has an H1 bullish reversal pattern. Okay, that to me tells me that there is a chance, not very likely, but there is a chance that this could be the reversal pattern of GU going up for the coming couple of bars at least. But I need to see the H4, right? And that's my rules that I have for my trade plan. And when I go on tilt, I start skipping those steps. And when I catch myself skipping steps, that's the sign to me, because I'm not my logical side of my mind is not in control, right? My other side, that emotional side of my mind, is getting control, and I need to stop that in its track, otherwise it's going to hurt me, right? Because I'm going to be doing things that are not according to the plan, which going on tilt is completely not according to that plan. So the thing is, I start skipping steps, and I stop, the rules no longer are very clear to me, or momentarily I don't think about the rules anymore. I become that bull that doesn't think about anything else, just that red dowel, which would in this case would be getting the win. And that's what you should not be doing. You should be focusing on the process, not on winning the trade. Focusing on the process, not on winning the trade. Very important.
Yeah, very, very important. So we have some requests here in the chat. So I was thinking we could go through some of these. We have the first one being Euro CAD, and I'm thinking maybe I could do just a quick analysis on this, and then you'll do a quick analysis on it as well, and kind of show viewers what we're thinking here. So on Euro CAD, what I'm seeing here is, let's see, let's first look at the daily. So I remember having this chart up a couple of days ago, and I looked at this as a break and retest on the daily. So I looked at a pretty clean level here. We had that breakout. We came down and we retested the breakout level right there. And now we're coming down for the second retest. And actually, you could say that this is the second retest, and that's the third retest, because you already had immediate retest with the wicks straight after getting that breakout. So I would say that we are at support, but price action is telling me that this is not the retest. This is not the support that I would be looking to long, unless we go into the lower time frames. And we already had the bounce on the 4 hour. I mean, that retest on the 4 hour, that was, if you wanted to long that retest, then this would have been the bounce. Now looking at the 4 hour, we actually have like 1, 2. Actually, I'm writing with another application, so you can't see it, but you get 1 touch, 2 touch, 3, and then perhaps even 4 or 5. So I would say that we are right now on the 4th or 5th retest here at this level, which to me is quite dangerous to go long. So on EuroCAD, I'm not going to be able to go long, but am I going to go short? Well, shorting here would mean that I'm basically shorting support, which to me is never a good thing. So for me, the best trade on EuroCAD is to not do anything at all, basically. Just wait till you have different price actions for me to win. And before we move on, I just want to comment that we're not doing any giveaways today. Okay, so we're saving all this. So what we're doing is we have this 40K celebration coming up. When we hit 40K, we're gonna do a celebration stream with giveaways, and we're gonna do an event out of it. So we're not doing giveaways today. We're saving the giveaways to give away on the 40K subscribers With that said, it doesn't mean you're not supposed to like the video, because one small like from you means the world to us, and it will, activate that YouTube algorithm, get more people in there so we can help more people trade. All right, what's your views on you know
Gold.
what? Make sure there's, I can't promise anything, but it's interesting. Yeah, that's all I have to say. It's very, very interesting idea.
All right. Let's see. Let's look at gold. Let's look at the next one. So someone requested gold. That's thank you for that, Vikas Patel. Let me put that. There we go. I think is it now? No, it's not showing yet. Doesn't matter. But yeah, there it is. All right. So what I see is, of course, from bird's eye view, right? From a distance, you can see, even if without structures, you can see this is, as I said many times before, this is very bullish, right? There's nothing bearish about this if you look from afar. It's making higher highs, and it's just had this impulsive move up. So continuation to the upside is something really to consider on this time frame. It's not over yet, at least doesn't look like it. But if we look closer, what do we see? After this impulsive move, it started forming bearish structures. You have this bearish order block being formed. This is on the weekly, mind you. I know it may not sound very attractive to be looking for the weekly if you're an intraday trader, but you need to know what's happening on the higher time frame, because that will decide what will happen on the lower time frames, what direction we will be going. We had a bearish order block, right? And we formed another one. This was retested. The first one was retested, and it did hold, did not invalidate the first one. Let's see. Nope, did not invalidate the first one, and it formed another one. After that, it came back and retested it nicely, and that had the expected result, right? It reacted as it functioned as a support, which is what it is. And another thing, we formed a outside bar last week, right? So we are bearing pressures are building up. Okay, doesn't mean the price will go all the way down to zero, but you have to put things into perspective. It is giving us signs that the sellers, or at least people, are taking profits, or sellers are coming in, whatever you want to call it. But selling pressure is building up. Okay, now, okay, so what else do we have? The price is getting compressed. The price action, before it was a lot of directional movement, very clear which side was in control, and now it's shifting to the other sides, forming 3 weekly bearish structures. And if you look well to the left as well, we do have a bullish order block there. So that's the area of demand, right? So we are currently in a bullish demand area based on that engulfing. But if you look above us, the bearish structures are piling up. So that tells me that the likelihood that it will probably break this order block are, I would say, probable, right? We don't know the future, but it looks like it wants to do that. The other reason for that is the following. Let me get an arrow in place. Let me see. If we see, this is that's the engulfing, right? This bar is what made the engulfing that formed it. After that, right, it went, it did interact with this order block, right? And what would price do? This is the question I ask myself. What would price do when it gets into a demand area, in this area? If it is going to function, if the structure is going to push price back up, right, reverse price into a long again, right, it should be forming bullish structures. And what did it do when it came back to this order block, this demand area? It formed an outside bar, completely the opposite. So that tells me that this order block doesn't seem to be the one that is going to reverse price. If that is the case, then we should be looking for structures below us, but we don't have anything on the weekly time frame. So we don't have any other structures other than all the way below here. Let me get this. This is an outdated order block. This is the actual, this is the last one, and this has been invalidated as well as this. So this is the only structure, but that is, I don't know, we'll have to see in the future if this is indeed the structure that a price will be going to. Personally, I think that's a lot of retracement. I don't think it's going to retrace that far, since, you know, on the bigger picture, it's been very, very bullish, right? And we'll have to see. But in the meantime, what we can see is that the bears are making it very clear that they want to go, you know, push price lower. There are 3 signs back to back telling us that it wants to push price much lower. And we'll have to see, but it's likely that they're going to succeed to some extent. Okay, so that's the weekly. If we go to the daily, if you go to the daily, that's not the tool that I wanted. Let me get this a little. We do see that the daily order block is holding quite nice. Not only that, it had another order block that was formed, right? And that one is also holding, right? So on the bigger picture, it's looking weak, but on the lower time frame, on the daily, it's still holding that last, you know, line of defense. So that will be the sign whether it's going to hold or not. Can it hold these line of defenses? And we don't know yet, but this big candle into it, if it's going to reverse, it better start doing it, you know, sooner than later, because otherwise this is going to continue lower. Yeah, that's what I can say. It's not there. There is a quasi, right? There is this structure, but I will tell you right away that it's not a good quasi. It's not one that I would like to be taking. Yeah, it's a bullish quasi where you have this as the left shoulder, the head, the break of the neckline, and now price is coming back into these order blocks. Right, this one has been taken out already. But let me mark this one. This is actually an entry order block. You could call that on this structure. But remember, it is at the end of a bullish run. That's not where you should be looking for the bullish quasis, right? Quasi should be at the end of a bearish run, a downtrend, and we're coming from below. So that makes this not a good quasi to be trading. But hey, it's there. So and it is reacting to that entry order block. I would deem this as a low probability entry, but this is, if it is going to reverse and have some kind of a pop, this area is the area of demand. So that's what I'm looking at. And if we go to the lower time frames, there is actually, it doesn't look that very convincing, but since we have this big impulse to the downside, right? Anything it does before, as long as it doesn't break this structure that I left behind, anything it does here, to me, is just retracement for a continuation until it breaks it. If it breaks it, then we can talk about the shift that has occurred, but that hasn't happened yet. It doesn't look like it's not. There is no signs to it. So if it is coming, then maybe it's in the future that it will show us, but it's not showing us its hand yet. So that is for gold. Basically, we are seeing, if you look at the H4, we do have bullish structures being formed within that daily order block. So you could be, for an intraday trader, you could be trading, you know, these are the demands area to be looking for that long. But I wouldn't be holding that for very long. There will be just, you know, intraday trades looking for perhaps 30% of the ATR on gold, and that's it. And not trying to, you know, catch a big move, because, you know, it can. This is considered, to me, this is still just a retracement. So how far this can go, there's nothing to the left to have any indication other than this bigger this H4 order block. So we'll have to see, you know, how it progresses in time. But that's what I see. So I would be taking, you know, no swings, just intraday trades on gold if I'm going to trade these H4 order blocks. If it comes back into them, let's say it does this, then this trade would make sense, something like that. Yeah, that's the analysis top down from the weekly all the way to the H4. That makes sense to me. What else do we have on requests?
I want to cover. I want to take a look at gold as well. I want to focus on the. We do have really good looking level right here. So on the 4 hour, just look at this on the 4 hour. Is that candle right there? There's a a break and retest. You have a level here above. I think this is just a beautiful trade right here where I would have just entered on the close of that 4 hour candle, TP at that level, and then place the stops somewhere around this week. It's above 1 hour. It's a super simple trade right here in gold, and yeah, it's kind of like the same thing as you showed, but it's just a very good looking break and retest up to that level above. So I think it's it would have been a really good trade. I'm a bit bummed that I missed this one. I remember I was in a interview with a funded trader when we had that move right there. Funnily enough, he only trades gold, but we both missed this on gold because we were having an interview where we talked about him trading gold. It's pretty fun. Yeah. So next up we have actually I'm gonna go with this one. However, is want to make sure that this guy was actually spamming use the JPY, so I had I gave him a timeout. So remember that I'm reading all the comments. Okay, so I'm reading all the comments. If you type something in, I'm gonna save it. So there's no need to spam. We'll get a question quick on where's Alex. Alex is working in the background with. Yeah, he's very busy around the office at the 5ers, working in the background. He's probably listening. Well, actually, no, he's not listening. He's probably working on something else. Alex will probably be here maybe tomorrow. I think maybe tomorrow. Yeah, let's take a look at USD JPY. Do you want to start with that one?
Sure. I'll put my screen on. There we go. All right. So from a top down, again, what do we see? We have price have been, this has been taken out. As you can see, I haven't analyzed this pair in a long time since I don't trade it, but we are currently in a weekly supply area at the end of a bullish run, right? So that's the perspective we have right now. The expectation is that at some point this could form, right? This is on the weekly. Don't forget that. Price has been very bullish, and it will likely to continue at some point. But this order block, you can expect some kind of push to the downside, right? So that's the you should take into consideration on the bigger time frames. Okay, so if we go to the lower time frames, what do we see? We have an order block that has been was being respected very nicely the last couple of days, but it's not forming, at least not in this time frame. It's not forming. It's not breaking any structures, right? Look at that. It is making. It hasn't taken out this high yet, so this is not a higher low, but it looks very like it's going to be a higher low. In that case, so that means that this order block, it's not holding its stand, right? So it doesn't look like it's going to. It needs to stop. If this order block is going to reverse price, it needs to form those bearish structures, those reversal patterns, and it's not doing that. It's still making higher lows and higher highs. So that tells me that maybe this order block will not be the one reversing price, and meaning price might be needing to go even higher. Okay, so what else do we see? If you go to the lower, recent price action, we have these structures that are still holding, right? So we are coming back into more supply area, right? So this is the area of interest. Will this hold or not? Because to me, these are the last places where the sellers came in, right? If they are going to defend price, this is the place they're likely to want to defend, right? And if they don't, then it's going to be clear to us this is going to keep on going higher. And the market structure, as I mentioned, as I showed, is still bullish. Even if we have that weekly engulfing, market structure is still looking nicely bullish. So it could just as well continue to do based on the market structure. Okay, so what else do we see? We do have below us some structures.
Can I just sorry if I'm interrupting here, but You said that market structure looks nicely bullish, but if you go back to the daily,
yes,
is that? Yeah. Okay. Yeah. I get what you're saying. But you know what? Like the first strong move to the upside, like that higher high you have to the left with the big wick. Wouldn't you say that the fact?
this move.
Yeah. That whole structure, right? So the high of that move, right? So because what you have here locally is you don't really have higher highs and higher lows. You see price coming up and like hitting that resistance area. And would you really say that that is looking very bullish, because if you look at the overall trend here on the daily, it kind of feels like there's a slight shift in the characteristics of that uptrend.
It depends on what you're looking for, but if to me to consider this on the daily, right, not on the weekly, on the daily, for me to consider this bearish or not bullish, whatever, or just sideways, this is the structure that needs to be taken out, right? That's the last swing low that would be the break of structure to me, and it hasn't. It's not even close to that. Not only that, but as you can see, it has a retested a resistance that it couldn't break before. It broke out, came back, and rejected very, very nicely to that break and retest. It did that break and retest. So to me, it's still holding. All of this movement is not indicative yet of a bearish because it hasn't broken any structure. To me, this is the structure, the relevant structure it needs to break.
Okay, but I would argue that if price breaks below 154, you would have a lower low on the daily, and to me that would be signs of a break of structure. Why are you looking? Why wouldn't that be a break of structure? Why would you want price to move so far down?
Actually, I have a personal rule where I put my break of structure, and I don't see that personal rule that I have does not identify neither. I've checked them. All of this, if I were to really look harder, perhaps I can apply the rule and in here. And well, you could say, but in any case, I wouldn't have put it in here. You could make a case that the structure is a bit higher, but in that case, even if you do that, right, it hasn't broken it yet. So to me, this to me is not a place. It's not a swing low. I think that's the answer. This is not a swing low to me, and actually, this isn't either. If you look at it, it just went sideways before continuing. This is the swing low. That's the pivotal swing low, the structural swing low, and it needs to break structures. It needs to break a place where the buyers defended a swing going to the downside, and this wasn't defended. This was just a consolidation, a breakout. This was really very little consolidation and a continuation. But this is the movement. This is where the buyers came in and defended that pivotal, that swing, that structural swing low. So identifying the swing low, at least to me, this is the area of significance that needs to be broken for, or it needs to break something after that. Right? So it hasn't, the next one after you have this, right? To me, it needs to take out this high, right? This high, and then this one becomes the swing low. But it hasn't happened yet.
Okay, so for that to be a swing low, it needs to also break out. Can I share my screen just to give you an idea of what I'm watching? Because
before you do that, why do I wait for price? Why do I say it needs to break? Let me take this off. And I think this conversation is quite important. Why do I need it to make a higher high before I consider this to be the higher low? To me, this is not a higher low yet, not in this time frame. The reason is that we have from this the highest point, the recent high. What we have is this, and this is just a retracement to me, because unless it takes this out, it can still do this, right? It hasn't. I know that's the break of the structure, but it's not to me, it's not the structural, the last of validated or a confirmed swing low yet. It can still make, lower lows, and unless it takes this high and then this becomes the actual structural low you need to be looking for to be broken before you can consider it that it changed completely. I don't hear you. I don't know if it's
Okay.
only
Yeah,
me.
I had myself muted. Sorry about
Okay.
that. No, that
No
definitely
problem.
makes sense. Let me. I don't think you're. Yeah. Okay. So let me. Can I share my screen and show you what I'm watching?
Go ahead.
So we use the JPY, and I think actually I think I can remove this level right here. So what I'm watching, like, I think for me, I have rules, when a trend is invalidated, but to me it has a lot to do with the visuals, what it actually looks like, the higher lows and all of that. So to me, I'm viewing this as a low, higher low. Wouldn't really say that this is just consolidation, right? But it's a higher low, higher low, higher low. So breaking any of the higher lows, and of course this one is the most previous one. If I would see something like this, let's see if I can use the ghost feed here to see if that makes sense. If I see something like this, then that to me would be a break of structure, and I would not be looking at a bearish market.
I understand. Yes, but I think I approach this from the quasi standpoint, and the quasi in the idea of what I use for the quasi is that if this swing low, right? Let me go back to mine. This swing low produces the left shoulder. This swing low doesn't produce any left shoulder, right? Because it needs to make the head first. When it breaks this and makes the head, then this becomes the left shoulder. But that hasn't happened yet. I need that left shoulder. So this structural point produces the swing low, and this gives me then the head. And then if this, as long as it doesn't give me a higher high, producing another head, making this the left shoulder, I will be waiting and considering this to be the left shoulder and this to be the head. And in that way of thinking, I think that's the difference between the two of us. That I'm thinking of that left shoulder, the head, and then breaking the neckline. I'm using it as market structure as well.
Yeah. Okay. So that makes sense. So you basically we're looking at two different things.
Yeah, but on the other side, I can agree with you in this sense. This is the bigger structure, right? Because there is let me see. This high is to me the indication. If it can break it, then it still is. Or actually, it now still is in a bullish trend, and until it breaks that swing low. However, it can make smaller structures indicating the change in shift, perhaps on a lower time frame, or perhaps even in this. If let's say it shows a head and shoulder here, right? If it does that, I know that it didn't break this low yet, but this is already an indication that the market is shifting. And it's not, if we don't consider anything to the left of this yellow horizontal line, I don't see that either, right? What do we have here? We have a higher low, higher high, and this hasn't broken this yet, so I don't consider this to be valid. But already we have a higher low and a higher high, and that's what I meant by it's nicely bullish. The trend is still nicely bullish. Um, it hasn't broken that yet, and it needs to form that reversal pattern for me to consider it. The break of structure, the neckline, putting in a lower high, etc. And it hasn't done that yet. Let me put yours again, or
No, I think that makes sense. So basically, you're looking at the Quasimodo pattern, and within the Quasimodo pattern, there could be
another one.
Yeah, and I could also, I think when you see a Quasimodo pattern, I could see a break of structure, but for you, that would not be a break of structure yet.
Exactly.
So a break of structure for me comes earlier than when it comes a break of structure for you.
Yes. And
Okay,
that's the
yeah.
sensitivity of our rules, right? Because you have a certain number of rules where what you consider a break of structure and what you don't. And of course, we can have differences in that. And it's okay as long as we continue to apply the same rules all the time. I mean, me applying my rule and you applying your rule, because those are the handles we have to assess our bias. Is the market structure shifting or not? And we need to be applying the same rules if we want to have consistency. And I don't see on the bigger area here, I don't see a break of structure, and neither do I see that in a smaller scale, even if it's on the same time frame. I don't see that yet. So to me, even if we are in a weekly supply zone, right? Because we have an engulfing there. Apparently, we hit something on the weekly, a level, right? That is significant, where sellers are coming in or buyers are stepping out, whichever you want to say. But this is significant. This is a structure. It means that the bulls were not in control when in these two bars. The sellers took control. So this is a weekly supply zone. But if when you look at the daily, it's still not forming those reversal pattern. It's not breaking structures, not making lower lows. It needs to do that. And after this quasi, if we see that this quasi, this is the neckline of this price action. That's not the tool. Let me get that out of the way. This price action, considering only this price action, okay, this is the neckline that needs to be broken. And this is the left shoulder, and this whole complex would be, well, the highest point. So that is the head, and it needs to break this for me to have a break of structure, right? Break this, and then of course my entry is when it comes back to continuation. But that hasn't happened yet. It hasn't broken that structural yet. And I'm saying about this area, not the whole thing. So because this didn't break anything and below. Before this, this was the neckline on the bigger structure. So if you consider this price action, right, this swing low did not break that. So I don't see this as a break of structure, which was one of your first question. Isn't this a break of structure? To me, it isn't. And in this price action, it hasn't broken this swing low yet. So in that smaller, more recent price action, it hasn't reversed to me yet. So on the daily, and this is why I stress on the workshops as well in Discord, I always start with a monthly, weekly, even if it's for 30 seconds, because the break of structure, it needs to do that. That's the market telling us, at least in my interpretation, that's the market telling us there is a shift. So we should no longer be looking for that long, but we should be, waiting for that retracement. If indeed when it breaks let me see, when it breaks that structure and comes back to for the right shoulder, which it doesn't always do, but if it retraces back, then that's where I want to be taking that entry somewhere in that right shoulder for that move. That's where I want to be playing playing the market, participate in the market. So, and in both cases, it hasn't happened yet. So, so let me continue with the what else do we see? Let's see. So we have this is the bigger hasn't been, but the smaller structural swing low hasn't broken yet. So we don't have a quasi, we don't have a reversal. It's making higher highs still. We do have some structure, some daily order block bearish coming in of being formed. So there, the selling pressure is building up, or you could also say the bullish momentum is losing steam. Basically, it's the same thing, but it hasn't, at least not in this time frame, it hasn't materialized yet. So on the daily, there's no reason to think this is not a sell setup. I don't consider this a sell setup. What you do have is with lower, of course, you will see some kind of structure, and on the lower time frames, you will be able to find, yep, these are the structural lows, and these are the quasis, right? You can find that's the neckline on the 4-hourly. And let's see. If you put this, you select the retracement, you will see, you can identify. I will take these off momentarily just to we get more better visuals. Let's see, we have here a H4 order block, right? And it is above the 50% retracement. So that's a great area to be taking this, but not as a daily setup, of course, as an H4 order block. So this is a great area to be looking for a short, not on the daily yet, although there are reasons. Actually, let me check. I was my setups, of course, that's personal, but my setups are two things: are the quasis and fresh order blocks. So I did not check if these order blocks are still fresh, and actually, yes, they are still fresh. So I stand corrected in the fact that it's coming back to a fresh order block. It has a daily reason to bounce at this area, right? So not a quasi daily setup, but still a fresh order block based on this order block setup. I mean, based on this order block. And if you do that, it means that you have a quasi here, right? We have the, let me move this, right? That's the left shoulder, the head, the break of the neckline. And here it's retesting some structure in this leg. And the only structure I see on the H4 is this possible, and it is reacting quite nicely to it right now. So this is looking interesting, actually. For me, this is looking very interesting. Let's look. It hasn't formed an engulfing, at least not in this price feed. If you go to the lower time frames, you can perhaps find another shift in the market here. You can find another shift in the market on the lower time frame, maybe on the H1. But let me see if we can find one. And that could be very interesting because you have the daily fresh order block, the 4-hourly, a quasi, with an entry order block that the price is actually already has reacted to it. So you have many things aligned. Let's see the where is the structure line? The neckline is here. It hasn't formed the quasi on the H1 yet. So what are we left with? We have these structures where you could enter based on fresh order blocks, but there are many of them. So that's not ideal because the more structures, the more entry order blocks you have, the lower your win rate will be. I would wait for this to be broken and price to come back, right? So you're looking at this left shoulder, leaving that the head, that's the neckline. It needs to break this first and come back to some structure here. And if you have that, I would gladly take this straight, something like this. Of course, this is based only on how I see the market, and there are many ways to see it. You don't have to, do it exactly like that. And you have now a quasi on the H1, which has, you're also taking the trade on the quasi on the H4. So basically on the H4, you could be targeting this structure or even lower, right? Having the H1, the H4, and the daily, and I'm not even considering the daily. Based on the daily, these are the supplies. I mean, the demand area for the daily. So I would be watching out for this. I will be putting my stop somewhere there because on the daily, it has shown us that this could be a place where the buyers could come in, right? That's how I would do this. But still, it can offer us a nice 2 to 3. But that's putting my stop loss at 44 pips, which I never do, right? If you catch something in the range of 10 to 15 pips, you can have you a nice 6R out of this. So I think that's dollar yen is a very nice setup, but it has to break that neckline first. It hasn't done that yet, so it's not completely ready, and at least not in my opinion. But I mean, hey, you could be having different rules and could be trading it. It could have signal for you already.
Yeah, got a question here. How can they access your workshops in Discord, Victor?
By being by having an account with the 5ers, right? Once you have an account, you will have your personal client space or your dashboard, and in that dashboard you will have on your left upper corner, the right upper corner, there will be that Discord icon, which will give you the link or the entrance to the Discord. The Discord you cannot get in unless you are unless you have an account. So you have to have an account, and then you can enter the Discord community where you will find a lot of value in other members. There are more moderators there. I'm not the only one there. You have Rich, which is a great trader, and you have others as well collaborating and sharing, their experience and helping each other. So it's a great way to learn and to grow, and that's what we focus on with the Discord. So that's how you get in. You gotta have an account with the 5ers.
Definitely recommend, guys, that you check out the Discord. Go in there, go to the dashboard, and click that Discord icon. I think we're done with USD JPY, right?
I beg your pardon?
Yeah, I think we're done with USD JPY.
Yes,
so let's move on
Yeah.
to the next one. Let's see. We got CHF JPY. I can start with that one, and we'll see what we have here. So, like always, we start with the higher time frames. CHF JPY looks very, very strong, I must say. We had that breakout. Let's see. Let's go to the weekly. Gonna mark out that level on the weekly. Go back to the daily. That level already had retests. See the 4-hour. Yeah, I mean, if we didn't have that retest already, I would say that looks like a really good level to get in. It might be a good support area still on this region. So pretty much, around this level as support. But smaller, something like that. To me, I almost, actually, I always buy or sell the first retest. So if a level has already been retested, I wouldn't really be very interested in going long here. I do see a possibility of shorting this down to that level, but because of the very strong uptrend on the higher time frames, I wouldn't really want to short this. I mean, this is just massive trend right here, and I would not look to fade this. Now, if you are the type of trader that might trade like that, I would probably be looking at a TP here, and then some TP around that level. I would probably look for shorts here. And, you know, something like this, where we break this support and then retest and then down to that level. So basically, you know, a move from one level to the other. But this is a possible short in a massive uptrend. So the best thing is probably to look at this level and say, you know, probably better to look for longs in this level, on, you know, in this area. But still, I feel like it's been tested so many times. It feels like we're coming down for the, you know, 1, 2, 3, maybe third or fourth retest. We're coming down for the fourth retest. It feels like it's going to break down. So I don't know. What's your view on that?
Let me see. I'm trying, as you're explaining, I'm looking at the charts as well. This is what I see. Let me put mine on. So on the weekly, we have, this is very bullish. Market structure is making higher highs and higher lows. So this is strongly in place. That's the market structure right now, and there's no sign of any breaking of that structure. We do have a weekly supply zone. This could be the beginning or the deceleration of that trend, right? Not necessarily the break of it, but at the beginning, as you can see, price and this high price did have a bearish engulfing, and here it did not. Here it did have a bearish engulfing, so it had two out of those three swing highs. It had two out of which it had a bearish engulfing, but they are very small, right? So that's what produces that swing high, right? The bears coming in, retraces, and then continues. That's a little bit different if you consider this big engulfing, right? So something has changed if you read price action, that now the sellers are coming in much stronger. However, what has happened after that change in, more sellers coming in compared to the other swing highs? What has happened? What has they accomplished after that forming that engulfing on the weekly? So far, they haven't done nothing. They haven't done anything, right? Price has just continued week after week and haven't invalidated this order block yet, so they can still push price lower. But I mean, this is not typical. The sellers came in, that's the move, right? And now they are supposed to getting back into that supply zone for that continuation if indeed the sellers have come to control, right? And they're continuing to take control. That's not what price action is telling us. At least it's not visible. So that's one thing. Okay, so the on the weekly, there's no shift in market structure. Okay, it's still strongly bullish. If I go to the daily, this is not a swing low, so this is not a quasi on the daily. It's a quasi on the 4 hourly, the quasi neckline. The structural low that had to be broken would have been, I think, actually here. It hasn't broken it yet on the daily. So all of this is, still not breaking any structures. Actually, on the daily, it did take this out, so I stand corrected. This becomes now the structural low. But in any case, it hasn't come back to break it. So there's nothing wrong. The bulls are still in control. Market structure is still bullish on the daily. What we do have is the following. We don't have a quasi on the daily. What we do have is this. On the 4 hourly, we do have a quasi, right? This being the quasi, the left shoulder, the head, and break of the neckline. So, and this is one of those order blocks. It's quite wide, so it wasn't very good. Price did react to it when it come to it the first time around, but it still and even closed above it. So actually, the order block, that entry order block, has already been invalidated. So it's breaking bearish structures even after forming, quasis and weekly, but it's not, the bears are not actually taking control. So it still looks, I think it still looks bullish. I don't see a reason, but I'm not eager to be buying something at this area on the H4, because on this whole structure, I want to see something, a retracement where I can be buying. What structures do I see as retracements? Yeah, perhaps this daily, right? There's a little order block there. Maybe that, if it continues something like this, perhaps, where you would be looking for an entry on the lower time frames on that area, because you consider, from the weekly, the daily, it's not showing it wants to reverse yet. So you got to be going with that direction, with having that bias, and then you go to the H4 and looking for a long. But it's not my kind of trades, because you're at a very close to the all-time high, or not all-time high, but close to a previous high. So automatically, that's not a good place to be keep on buying, right? Price can reverse, because it can make a marginally higher high, but then reverse back, since you have all of this price that could retrace before it continues, and you don't want to be. So I don't see this as a great entry, at least not on the H4. Perhaps on the lower time frames, if you're trading, let's say, lower, you could be looking for something. No, not even that. I don't see it. No, I wouldn't be going long here, but if anything, I would be looking for a long, a structure that hasn't formed yet, but something that forms in this area, for that continuation. Because I do think at least price action is telling us that it's having an easier time continuing the trend than reversing from here. There's nothing wrong with the trend so far. It's holding ground nicely, I would say.
Yeah, that right. I think that makes sense, and I think we want to. When we look at something like this, and none of us can really see anything clear, that just stands out as just super clear. I think, I think it's just best to move on to the next one, because we don't have to trade everything. We don't have to trade every move. Actually, most of the time, we're trading fewer moves than there are moves. So just because something's happening doesn't mean we have to be in it. Like, the best trades are most likely the ones where. The ones we don't enter, the over trading is one of the most dangerous thing to do in trading.
Actually, someone said Gerald's game is saying it's talking about having patience to wait and buy, and I think there's a lot of depth in that phrase, because I was discussing this yesterday in the Discord workshop. As traders, right, we have no way to influence the market. Forget it. There's no way you're going to be, do anything on the market. We are small. We're nothing compared to, the other participants. So that is something we do not have in our control. It's not something within our control. There's nothing you can do about the market. But what you can do, and this is the only thing, and that's our strong point as traders, you can decide when to trade. That you have complete control of, because you can decide not to trade something that is perhaps not doesn't have the best probabilities. So you can be more selective, and that's where I think the power as a trader should, control the power, the force, the strong point of the trader comes in. You get to decide when to trade and when not to trade. And this, for example, on Swiss yen, that's a trade that I would let how you say that? I would gladly let it pass by, because I want to control and only take the select of the A setups, and this is not A setup to me, because you're gonna be buying at a place where previously it has shown to be a supply zone. right? It seems to be breaking that high, but I mean, how many times doesn't it sometimes it breaks and then comes back and turns the other way around. That's not the best place to be buying. So that's where I think the patience you mentioned, Gerald, it's that thought that, my control or our control is deciding which one do we want to be trading, which setups, and everything else we should just let go and just be an observer and not participate.
Yeah, that's a great point. The fact that one of our strengths are, one of the strength of being a trader is being able to decide when to enter a trade, and more importantly, when not to enter a trade. So I feel like, yeah, that's actually a great point. And I think most people watching here, you think that you probably need to make a lot of trades to make a lot of money, while the opposite is most likely true for you. When you're starting out, you know, when you're starting out, you're not going to be profitable. So the more you trade, the more trades you take, the more money you're going to lose. That's just a fact, because in the beginning you lose money. So what do you do with those losing trades? So, you take 10 trades, you lose a certain amount of money. Now you look at that certain amount of money that you lost on those 10 trades, and you have to view that as a tuition in the trading college or the school of trading. Because what you need to do is you need to look at those losers, because inside those losers are your key to winning. So you kind of have to flip that mindset. Instead of thinking, I'm losing money, think that you're learning a lesson. You have a lesson there in the loss, at least when you're beginning. Then when you're trading consistently and you're consistently profitable, then every loss just becomes a loss, and that loss just leads to the next trade, which leads to the next winner. So it's just following the process. But in the beginning, I think it's very important to view your losses as lessons. Victor, I'll be back in just a minute. Maybe we can look at. Do you want to take a look at? Do you want to take a look at Bitcoin? I know you're not trading Bitcoin very actively, but you want to take a look at it while you stay a second.
Sure. But before I do that, someone asked, or not asked, someone commented, had this comment on in the chat. Let me see. It was this Kandakar. Thank you for that comment about fair value gap, or the fiver fair value gap. I don't use them. And fair value gap, for those who, I think most people know what they are. And I assume this is the gap that this gentleman is referring to. And yes, fair value gap tend to be failed at some point. I don't use them personally, but they are basically the same. They're, to me, what fair value gaps are is they are the same. They are the expression of price action, the same as an order block. Of course, they're not an order block, but typically when you have fair value gap, which are imbalances because price didn't left this gap in between. Let me left those lines. Do I have those? I don't have that lines here. I don't know why I deleted them. This would be the fair value gap, right? That area between those lines that tends to be filled after some time. But what I've seen is they are the expression of the same thing that forms the order block. What causes fair value gaps? Ask yourself, what imbalances, right? There are the expression of imbalances. Okay, but what is imbalances? It is when one side is dominantly taking over, not taking over lightly, but completely taking over, so much so that it forms those gaps, right? Which are considered imbalances, ICT, etc. I'm not an ICT trader, but I mean, I know those terms enough to talk about this. But that's the same thing, that's the expression of the same price action that creates the order block, right? So an order block which has fair value gap, even though I don't use them, to me they're the same thing. They're telling me that price has that who is in control. It's the sellers are in this case it's the buyers that are in control. I don't use them, but of course I know that order blocks that are leaving behind fair value gaps tend to be much stronger. So price tend to continue much more before they come back, because the buyers, as in this case, the buyers were firmly, not by a little, but firmly in control. But yeah, I don't use them, by the way, so I don't look at them. But I'm sure, since they are the expression of price action, expressing really the same thing as order blocks, to me, they can be useful and be profitable if you use them the same way order blocks are. Okay, Bitcoin. Let's look at Bitcoin. Let's see. We have, I don't want to zoom out to a lot, but what I see is, let me go to the monthly actually, just to get more clarity, since we have a lot of things going on here. I don't Bitcoin, I need to say that. So let's see, what do we have? We do have a quasi, actually. And
there's always a quasi.
That's true. There's also always but there is a break in structure, right? That was the high and breaks the neckline, and now you could be selling or looking for lower time frames, looking for bearish structures on the lower time frames. But clearly that order block did not hold price, and there is nothing on the monthly, not here, not there, indicating that there are sellers coming, that sellers previously came into the market. Of course they came because price was pushed down, but they did not leave that sign of an order block, an engulfing, telling us that they are more likely to defend the same area again. So there is a quasi, a break of that neckline, a break of that structure, but there is nothing on the left tell me where exactly to enter. And so I wouldn't be able to get anything out of that. And also, crypto is different than Forex. So as with equity, you have like a bullish bias, at least if you look at price in general, this is not ranging, right? At all. It's not. It's going higher and higher. So if you consider that BTC, Bitcoin, it would be foolish to, it will be much better, the same as it is in equities. It's better to be a bull than to be a buyer than to be a seller in Bitcoin, right? That's one thing that even without those quasis, you should consider. Okay, so what do I see? We have previous swing high. We are there. To me, the fact that it closed above, that's a sign of weakness in the sense of this order block. So it's not an order block, but it is on the weekly. But the fact that it made a higher high, a close above that, tells me that it's still not weakness, but strong. It's weakness for the sellers because they couldn't defend that last swing high. But nothing bearish about this. If you go to the weekly, this order block has been eliminated by that close, and by doing so, this whole area, this whole complex reversal pattern is invalidated. Right? It's invalidating bearish reversal structures, meaning it's a bullish sign, right? So that's something to consider. Okay, hold on. And I have sometimes a hard time. I don't know if you have that too. Sometimes TradingView doesn't cooperate with those buttons. Okay, so what else?
Yeah, sometimes it's just hitting that stop loss right after entry. It sucks. I wish that never happened. No, but yeah, it's but it's a wonderful platform, though. It's a wonderful charting platform.
Let's see. We have bullish structure. That's the swing low to me, making a higher high. But this isn't valid yet. So I wouldn't consider this to be until it breaks this high. So that to me is the structure. Let me take this off. The the structure comes in on the weekly here, right? And by identifying that already, you can see that it has at all not even trying to break that structure. So it's bullish. I will still call this very, very bullish. It is having some difficulty here, but that's because we have previous high. We're in the range of the previous swing high. What else can we see? We do have a bullish order block here. That could be, this is the weekly. We did have this. This has been invalidated. In my book, in any case, we do have this weekly order block, which will, which could form or function as it is a demand zone. And on the upper, on the sell side, I don't see any on the weekly. I don't see any order block being formed. Right, that's already a sign that this is a bullish. That's a bullish sign. There's no bearish structure being formed. Right, if I don't see any, this could be the first one, but we're only Tuesday into the week, so this can still change. And even if it forms, that doesn't mean it's. I see this on the weekly. There's nothing bearish about this. It's, if anything, the bull are still in control. They're forming bullish structures, and we'll have to see if it comes back to this area, what it will do. And that could be a great area for a continuation if you want to be in this market. What else do we see? If we go to lower time frames, we do see a couple of course, we do have a little quasi here, which is great news for someone who wants to be in the market, right? The same as before. This is at the end of a bullish run, right? These are not the great bullish quasis to be taken. But if you really, if you really have to take it, then this would be the best place to be taking it as it moves out. You've got to have that retracement. In my case, let me get this out there. That's the retracement. So anything below that 50% retracement would be interesting for a buy, and that would be something like this. This is the area. Actually, I already that's the week. Okay, this is the daily. Order block. There we go, and there's nothing below us. So that's the structure I identify that it could, if it is going to retrace. There's actually another one up there. But it's, if you look at it, if you consider the range that it has been forming, right? This is the range so far in the last couple of weeks. You don't want to be going long at the upper side of the range unless you have a lot of things telling you that it's going to break out, right? And I don't know, you could, but it's the best place are, of course, when it retraces and gives you that discount, that better price to get in. What else do we see? Okay, so weekly bullish, right? Nothing bearish. The monthly, there was nothing bearish. There's no entry order block, no entry structures for the monthly. So the monthly is bullish, weekly is bullish. The daily, we are completely bullish. The structure, as I said, is below here, and I think the best place would be, I would be looking for a long here, but I don't like the fact that we are very close to these highs. So I would prefer price to come back into some kind of structure, some kind of demand, and that could be this order block. As I said, that would be one of the places that I could start looking for a long. And then, of course, when we get there, you need to go to the low time frames to catch, read that reversal pattern coming into the market. I don't. It hasn't happened yet, so we can't say anything about it. Technically there is an order block here, and it's still fresh. The price could bounce off of it because that's what order blocks do, right? They make price. That's a demand area. As I said, I don't like that because it's on the range. It's on the upper side, upper half of that range. So your probabilities of it continuing from here are a bit lower. But hey, if you have everything aligned, perhaps it's a great place. You go to lower time frames and you look for any reason, any structural. I do see I do find, right, there is that, there is like the minimum downtrend, you could say, from that point, right, to look for that quasi. But as I said, these are not the best quansis because it needs to retrace on the bigger picture as well. But if you really need to go long, then I don't have any structures here on the left. So actually, I don't have anything. That's another reason, another indication that perhaps price will go lower. I don't know. But that's what I would say. There's an order block here, but so far I don't see enough arguments to think that this is a great area to be, coming into the market. If anything, I would be looking for something in here, or perhaps future price will offer us a structure. That's my take on Bitcoin. I hope you guys could follow that.
Yeah, that was a good one. I feel like it's I'm seeing on Twitter a lot of people say, it's Bitcoin is very bearish. I can't really agree with that. I think, now looking at the daily, we're just we're in a massive range on the daily, but we are still at the upper
Exactly.
area of that range in an overall very bullish market. So to me, there's nothing, not really a lot of bearish stuff on this. Actually, I wanted to go and look at the AUD NCD short that I'm currently in. I want to talk a little bit about that because we talked about how entering, how entering here would have given me, better entry, and then that half an hour would be closer to price. So what I did here was actually I entered a new position here. So this is the first setup, and then as you can see, I entered a new position here with the TP is half an hour, and that is also the break-even price for the previous trade. So if it runs just down here, there's the local lows, which at this point seems rather likely in my opinion, especially if this 1 hour candle is going to close like this. I think we could very well see a move down here. Wait, let's see. Could very well see a move down here, and that would mean I close this trade at break even, and this would then be a 0.5 R trade, which I think is better than waiting for price to come down here. Now, of course, that does introduce extra risk to this, but I also added a trend line here because I wanted to cover this question. So what's your take on trend line breakout retest? And the only times where I really look at a break and retest of a trend line is if that can be in confluent with my other indicators and horizontal levels. So if we add a horizontal level here around the trend line, we see that this trend line, a break and retest of this horizontal level could be a breakout above that trend line, so you have a break above the trend line here, and then you have a horizontal level here where you also have the weekly open and that horizontal level. So it would be a break and retest of a horizontal level and also a break of a trend line. And sometimes you'll see price move like this where it kind of breaks out, and then you have a wick touching a retest of the trend line with a wick touching that trend line, but the actual candle closes above here. And those are actually very good retests where you have that wick testing the trend line, but the candle is closing above the horizontal level. But anyway, what I wanted to focus on here is how I'm basically entering a new position for a very small move to the downside, and still be able to be profitable. The only problem here is I'm introducing more risk to this trade, which might not be the best thing here. But I think, in this case, at least on the lower time frames for small move to the downside, I think the probabilities are in my favor, because if you look at a completely clean chart here, and I can remove everything, let's see, you can quite easily see that you have this downtrend with higher highs and higher lows, and then you break it with lower lows and lower highs. And for price to just move down here, to me, that seems quite likely. So I decided to add some risk to be able to make some money on a very, very small move. But the lesson here is, this is the right trade. That to the left, that's the right trade. This trade is a trade that I shouldn't have taken to begin with. That this was the right trade. And yeah, that's it is what it is. But as long as I know that as long as I keep notes of this and I make notes in my journal and I remember to look at this trade and say that's an early entry, I got too impatient, then I'm able to perhaps identify that the next time I feel the same emotions. And for me, it usually starts with emotions of stress. So if I feel that I'm watching a chart and I feel stressed, and I get that feeling of like, I'm not really sure what to do, I'm not really sure if this is a good idea or not, the best thing to do in those cases is just not to do anything, just take a step back.
Well said. Well said.
You don't use any trend lines in your analysis, do you?
No, I don't use them. That doesn't mean they are not useful. You will see from time to time, I may have a diagonal line, in other words, a trend line in, because sometimes the same as you do the break and retest, that happens on the trend line as well. As you mentioned, sometimes you will see when it breaks the trend line, it'll come back and retest that trend line again from the other side. And what was before it's a flip, right? So what was before a support becomes a resistance after, and then it continues. So I do look at them when I see them very obvious, but they're not part of my trade plan. Like I don't use them. I typically don't have them on my chart, but they are, I think, just like horizontal lines, they can be useful. You can build a system perfectly around trend lines as well. You just have to have rules for them. What constitutes a trend line? How many touches? How close does price need to be for it to be a touch, to be considered a touch? Because price doesn't come always exactly there. And when is a trend line broken, right? Is the wick enough to break it? Does it have to close below it to break it? You'd have to have some clear rules, objective rules, as to which trend lines are still valid in your system, which one's not, and then you trade and collect data and see how you can capture that move, because trend lines, they do indicate something, right? They indicate a trend. They're called trend line. So if you can, and they can help you identify that trend line, and you can ride along with the trend, or perhaps identify when the trend breaks by the break of that trend line. I used to trade them a couple of years ago, not very profitably, but it may be because I didn't look enough for the edge there. After a couple of months, I did analysis and I was barely profitable, enough for me to say, no, I'm going to be looking for something else.
So I took a trade on NCD CAD yesterday. I showed it live, and I want to show how I managed this trade. So I entered here and put my TP based on just that move. Again, just looking for a very, very small move to the upside. The idea here is to have a system where I'm just asking for a very small move to have a high win rate, but a low risk to reward. And it feels so wrong when you see a trade, when you put the long tool on here. It feels like it feels almost like you're putting on, you're using the wrong tool. You know, when you're supposed to put the long tool on and you put the short tool on instead, it kind of looks like that. But this is actually what it looks like when you're trading in negative risk to reward, which is not, I'm not used to that at all. It's going to take a while for me to get used to that. But the way I, you know, the way I manage this trade is, I'll show you. So we had that move to the upside, and I looked at, I believe maybe looked at the 15-minute or something like that. But I viewed this as, you know, got a low, higher low, higher low area, and I'm looking to move my stops up with every new higher low. So here we had a new higher low. And when we had that, I decided to move my stops here, secure the trade, put it into, you know, a little bit into profit. So what I'm doing here is I'm being quite active with the trade management, and then you'll see price actually running up to that level above, which was my original TP. Now, again, this is a profitable trade, but I've actually marked trade management as not according to plan. So if you look at my trade journal, you will see that entry is according to plan, exiting is according to plan, but trade management is not according to plan because I'm not supposed to manage the trade. That's not what I've tested. You know, I have not tested, you know, entering on the 4 hour and then all of a sudden managing the trade on the 15-minute. That's not what my system is or statistics is. You know, that's not what my statistics are based on. So it's also interesting because, you know, this was a winning trade, but it's important to understand that bad trades can also be winning trades. Winning trades can also be bad trades, and it's super important to understand when you're winning for the wrong reasons. I think that's very important.
For sure.
So yeah, this was a bad trade, but it was a winning trade. Just like this ADNCD trade, if this is a winning trade, I mean, yeah, if this is a winning trade, it's still going to be a bad trade because I've completely messed up with the management of this trade. Now you see, it only needs to run down here, okay? I'm only looking for a very, very small move down here to put me a break even on this one and up and half an hour on this one. But hitting stop loss means I'm down 2R. So I'm risking more than I'm supposed to be risking, but I'm looking at the probability of this and thinking, I need to save myself from this mistake, and it now looks like a good opportunity to do so with the probabilities in my favor. But it's a bad trade. So if this is a winning trade, I'm still going to be up like 1.5R on the week, and I have a 100% win rate. But it's not a good week. It's very important to realize that I've won for all the wrong reasons. You know.
I think the question to be asked is, what is the definition of a bad or a good trade?
Okay, so the bad trade, for me, it's very simple. A bad trade is a trade entered based on something else that's not in your trading plan. And for me, especially, exactly. It's a trade based on the mental errors.
Exactly. That's exactly right. The definition, that's for me too. My definition for a bad trade is a trade where I did not follow my trade plan. It has nothing to do with winning or losing. Nothing to do with winning or losing. And we tend to associate, because in life, if you win, you typically did something right. But if you're not following your plan, you're not doing things right. It doesn't matter if you win or lose. And that's a bad trade. So you can win exactly as you said. You could be winning with bad trades. And that's a recipe for disaster, because if you're not following your plan, chances are you will keep on not following your plan. And your plan is your what gives you certainty to some extent based on your data, because that's why you have a plan, because you have tested something that works, and that it resulted in a plan, and you need to follow that plan if you want to see the same result. And if you're not following the plan, that's a recipe for disaster. And you may be winning, but it's not gonna probably not gonna last long, or at least the probabilities are not in your favor. There's a
Yeah,
go ahead.
Yeah, so as you can see here, I'm just waiting for that. Just waiting for that move to the downside. I'm basically the problem here is that I'm risking. Oh wow, I'm risking way too much. You could look at this and say like I'm risking 400 to make 200, but I'm actually risking 800 to make 200. So the risk to reward of this trade is catastrophic. But as you can see here, the first trade is in profit. The second play, the second trade is in profit because that's the entry point. But the first position is still in way too much of a drawdown. But all I have to see is just for price to break down lower here. There's a lot of volatility now, by the way. Do we have anything going on?
Let me check. I think we already had the unemployment number for pound. Of course, you are not trading the pound, right? You're doing Aussie NZD, so it has nothing to do with the pound. That's the only red folder of today. That was this morning, pound. So there's no news on, at least not red folder news. So I don't know the reason for more volatility on Aussie Kiwi.
Interesting. Well, we'll see how this turns out. What I'm seeing now is you see price on the lower time frames. We're hitting that. The good question. Why? Let's see. What was that question? Why? When you exit now that bad trade and keep only the good one? Because I feel like I have a plan, and the plan is, if I have this stop loss in case price just breaks straight out, I'm not going to lose too much. But the plan is if price clearly breaks above this high, then I might exit manually. Because if you look at the 1 hour, there is a, we do have a solid trend line here. And then by adding the moving averages, you see that high of that wick is hitting those moving averages right here. You get the trend line, you get the moving averages. If we break above these moving averages and that trend line, it might be better for me to just exit this trade. And then at that point, it becomes a 1R loss. So pretty much what I'm doing is I am risking with the stop loss, I'm risking 2R. And that's just because if something happens and price just pumps, then I'll lose 2R. But my mental stop loss is here. So I am actually just risking 1R to make half an hour, which kind of makes sense. But yeah, so price action becomes very clear on the lower time frames here. We have that hit of support. If we break out here, I'll get out. But I don't want my stop loss here because price might just move like this with a wick and then continue lower. So I want to make sure that I exit this manually to make sure that I don't get tricked by a wick. Okay, another question. What's your stop loss percentage per trade? Do you have a max? Okay, so this trade here, I'm risking 0.25%, so it's 0.25% on this one. Do I have a max percent that you're following? Yeah, so I always risk on this account. Well, actually, it's on almost all my accounts, I risk 0.25%. I have some accounts where I have 1% and even 2%, but those are small accounts, personal accounts, because I'm doing experiment, right? You're showing like what happens if you risk 1%, what happens if you risk 2%, but those are small accounts. On the big accounts like this one, 160K, I risk 0.25%, which is around $400. To me, risking $400 is that's okay. That's good, So the bigger the accounts, the less I risk. But that's mostly from a psychological point of view. What you should be doing is what Victor talks about. You should be looking at your max drawdown or your average drawdown, and then divide your risk based on that. So what's the drawdown of the system? And through the testing, the drawdown of the way I'm trading is 3R. So I could be risking more than 0.25%. I could easily be risking close to 1% per trade, especially if I have a 72% win rate. And that's the goal. But the thing is, I have a mental block. Like when I risk more than $1,000 per trade, it's like, it's a bit too much. I don't like seeing my P&L go from 0 to 1,000 minus quickly. I mean, 1% on this account would be $1,600. That's a lot of money to be losing on one trade. So it's a mental block. I would much rather risk $400, lose $400, and yeah, it's a block. I'm not ready to lose $1,600 on a trade yet. I feel like I'm not really there yet. I'd like to keep it below $1,000 per trade.
Yeah, that's very good of you to be aware of what is your limit, your mental limit in terms of swings in your equity, because 1,000 is too much of a swing per trade in your equity, and that's very, that comes with I guess with experience, because you have had it in the past and you've seen that you perform worse, right? You're not able to keep your logical part of your mind in charge, and you start getting emotional, and maybe fear kicks in, and you're doing worst quality in decision making. So it's very good to. And how did you come about to know that limit, that mental limit of 1,000? Did you journal about it, or was it clear just by doing it that you shouldn't be doing it yet?
I think what the bigger your position size is, obviously the more money one tick is going to be. And if price moves heavily, like now, I'm going to show a MetaTrader here, and you can look at, if we look at 80 NCD here, there is obviously some volatility here. As you can see, quite a lot of volatility, but I'm, in $28 profit, which is might not sound like a lot of profits, but then if you flip it around, I'm in a loss and price moves around. I would much rather see price move around and tell me that I'm in a, $20 loss or $50 loss. But what if it instead would say, I'm down $20, and then within seconds I'm down, $600, and that fluctuation in P&L affects me too much. I have a hard time looking at price and then say like, oh, I'm down $50. No, I'm down $600. Oh no, wait a minute, I'm down $1,000. And then all of a sudden I'm up 200. It's like that fluctuation, that that fluctuation in P&L, but small moves, kind of, I feel like it affects me. So what I've done is I started with 0.13%. So basically 0.12.5, which is half of 0.25. So I started with 0.12.5, which is around $200. So I risked $200. And I liked it. I became comfortable with that risk. I was used to losing $200 when I lost, and then I doubled the risk to $400, and I was getting used to $400, and then I doubled that risk to 0.5%, and that's when I started having problems. And I always want to make sure that my risk is in increments of half. with beginning at 12.5. So it's either going to be 0.25, half an hour, 0.75, or 1%. And that's going to be easier when back testing and testing everything. But it's basically about testing yourself. And but the thing is, if this works, if this experiment that I'm doing right now, if this works, then I could easily be risking 800. If I know that I'm only going to be risking 800 like once a week, then definitely I don't have a problem with that. But when you have a win rate that's around 50% or below 50%, you know that every other day you're going to be losing. You better make sure that you're comfortable with losing that amount of money,
Of course. Yep.
So if my calculations are right, if this trade, if this position is going to hit that TP below, I will have made it's a small amount of profit. But honestly, I just want to get out of this position. I feel like I want to get out. You know what? I'm just gonna close it here. I want to get out of this. There's a small win on that one because I feel like I made so many mistakes on this and I can't really take the stress of being in this position. So yeah, I'm getting out here.
It's good. It's good. At
least I patiently waited for at least I patiently waited for, because I was down, price. Let me switch to trading view. I was down quite a lot on this position, as you can see on trading view, but I managed to get out of break even. And this is a good question. Why are you so emotional today? I think because I'm testing something new, and I'm a bit it's a bit scary. I'm testing something new here, and I've both the trade from yesterday was a trade where I made some mistakes in management, and the trade today I got out of small profits. I got around break even on this one, but the trade that I should have been in is the one to the right, and I basically just made mistakes, with entering that one. So I feel like I'm I think it's the fact that I'm testing something new, it makes me nervous.
And it's good that you're aware of it again, because that will help you navigate that emotion better, manage it better, be more conservative, like you just did. I know it sounds like, why, if you have a plan, someone could be watching and say, if you have a plan and you're going to be making half an hour, 1 hour, whatever, why are you closing the trade when I don't know what you close, but something, you're break even, right? Where you at? Yeah. Why did you close that? Right?
It's a winner. It's a small winner. So we have it is a small winner.
How much was it?
Like $40.
Okay, so it's 0.1 R.
Yeah.
No, but it's nice. It's a positive break even. If someone could see that and say, okay, why are you closing it if you have a plan, if you're reading things? But I think that it's better to be conservative than to be aggressive in trading. It's better to be, because to me it's a sign of maturity when you are taking the conservative way. And in this situation, you were aware that there are certain circumstances or conditions that are affecting you in some way or another, because you're trying something new, because you're feeling perhaps a little bit uncomfortable. You're not sure how things, because perhaps you don't have enough data on this new thing you're trying out. You're still in the early phases, and that brings, it makes you a little bit more sensitive, and you're aware of that. And I think it's a good trade not trade, but trait, that you are able to be aware of that, and say no. I'm not in my, I'm not in the flow because I'm a bit edgy. I'm going to just take it at break even, and not push it, right? And that's, I think that's a very good characteristic, and actually I applaud that. Even if the trade isn't like something you say, oh wow, no, but it doesn't matter. It's the how you handled it. I think it's a good trade in that sense, because you intervene and you were aware of your situation, of your internal working while trading. So I think
Mm.
it's a good example for others to see.
Yeah, we want to make sure that we're trading from what is that? Mark Douglas says, uh, the um, the in the now opportunity flow. And I think that is a pretty good pretty good thing. Yeah, a haircut. Well, I did get a haircut not many weeks ago, but yeah, might have to get a new one. But yeah,
uh,
also this coming from Gerald's game is I love it. And that's what we're trying to do here. We're trying to be genuine, and that's the reason of having these live streams. Show you the reality of trading, and help you guys
yes.
become better traders. And to be completely honest with you guys, and to be transparent, we're not doing a giveaway today. Let me talk a little bit about that. The fact that we're not doing a giveaway and why we're not doing a giveaway. That's because we feel that these live streams, like, so what's the reason for us to do these live streams? Well, the thing is, with a prop firm like the 5ers, when we have people coming into the 5ers, getting an account, getting a funded account, you trade real money, you trade our money. So the money that you're making means that we're making money. If you make money, we make money. So if we can help you with these live streams to get a funded account and trade well with good risk management, that means you're going to make money, and we're going to make money. And that's the main focus of these live streams right here. But we also feel that the live stream has become something different. It's most people come here for the giveaways. So we see that at the end of the live stream when we do the giveaways, we have a lot of people coming in, and we want to make sure that the people that are here, that are watching the live streams, are engaging in the live streams and giving us all the good questions. We give them the educational value that you guys deserve, because I've been trading for 7 years, and what I love about this is to be able to help you guys become profitable. That's like one of my life missions, to help as many people as possible, experience the life of trading as I have, with the freedom that it gives. So yeah, that's just. I'm not saying we're going to stop giveaways forever. I'm just saying that we're changing the structure a little bit to make sure that the focus is not only on the giveaways. Okay, so that's just a quick comment on that, and hopefully you understand where we're coming from here. And yeah, with that said, let us know any questions that you have, or any problems that you have. We would love to help you guys out. But I see that we're actually a bit over time here.
We've been having a good time. Time flies when you're having a good time.
No, but this was a great live stream. I think yesterday I'm a little bit interested in doing. We're gonna do some live scalping tomorrow, or at least you don't have to do live scalping, Victor. I know you're not that super into that, but I'm actually. So when I tested this new approach and this system, I saw that this actually works really, really good on the lower time frames. Exiting at half an hour works insanely well on the low time frames. So I think I wanted to show you that, guys, tomorrow, to show you the process that I've tested. Because when you're scalping, so the idea of exiting at half an hour is you're just asking the market for a very small move. And when you're scalping, that's exactly what you want, just a very, very small move. So it fits very nicely on those lower time frames.
Nice. Yes, I think I will be joining you in terms of scalping tomorrow. because to be honest, I am also. I think I mentioned this before, that I'm trying to expand, different signals. I have my main signal, which is based on quasis and order blocks, but it's on a higher time frames all the way, and it has alignment, etc. But what I what I was thinking is that in between all that price action, I do have, I do know, I can identify areas where I know there's going to be a little pop or a little reaction. And if I can, I think I can, and I've been doing that already behind the scenes, scalping based on the same structures that I identify for my other strategy, but just going, as you said, going for, just that little move that comes after it, forms a structure or interacts with an opposite structure, or what have not. So I will be trading as well, I think, tomorrow, for sure.
All right. Love it. All right, guys.
There's actually this person, Gerald, who has been giving us good questions. The workshop.
Yes, definitely. Thank you, Gerald. Very good question today.
The workshop is it's not in a channel. It's the audio channel. So it's a session, right? So I will be there. Actually, you can hear me talking, and I'll show my screen as I explain what I see in the market. So it's not I'm not posting. It's not based on posting setups or messages, but it's an actual session you can follow.
Yeah, you can go to the Discord server, and then at the very top to the left, above all the channels and above all the voice channels, you have something called events. You can go into events, and you will see all the events that we do have in the Discord server. And for example, you have Victor's workshop, live trading and analysis, which comes up and is starting in 3 minutes. So all you have to do is go to the Discord, look at the events, and you'll have all the upcoming events right there. And I would highly recommend you join those, because Victor is really, really good at what he does. All right, guys. With that said, I'd like to thank you all for joining today, and I hope to see you all in the live stream tomorrow, when you're going to see us do some scalping. That's going to be very fun. All right, guys. Take care, and see you tomorrow.
Bye-bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers.